Welcome to the Rigatoni Capital podcast. I am here with my great friend Kevin, also known as Bagholder on Substack. How you doing today?
I'm fantastic, sir. It's good to see you again, Colin.
Yeah, it's been a while, huh?
Yeah, post holidays.
Yeah. Yeah, it got kind of busy there in the beginning of the year for work stuff, but I'm happy we could fit you in. And instead of going over stocks and stock market news, the only thing I was going to mention was I think it was pretty interesting that the dollar is kind of selling off even harder now. That's the dollar index, the Dixie. So that's kind of like the setting because we're recording on January 27th, Tuesday evening. So that thing is kind of like a falling knife right now. We can share the screen later, but really we want to talk about your latest post to probably start, which was titled Pyramid Scheme on Substack.
Yeah,
Uh, um, and this is on your newsletter called My Two Cents, which I'm subscribed to. And I recommend everybody please subscribe to Kevin's Substack, Bagholder Substack, um, because he'll keep coming on if more people subscribe to him. You understand how this works, guys? Um, so, hey, what I kind of wanted to ask was, you know, where you kind of touched on some of your history there when you were a young child, and I think you had a very interesting upbringing. But you were in your grandfather's bar, and you met the local bookie, and he kind of turned you on to parlay cards. But is there anything else that you want to talk about in your childhood that brought you to where you are today? Because you kind of had an interesting childhood, and if it's too personal, I completely understand. But I think your childhood's got a very interesting story and background, and we never really dove into it. I don't know if it's too personal or
no, not
not,
at all, not
but
at all. I That was a fundamental point in my life because it really directed where a lot of my future energy went. Another big influence from those years was I worked as a caddy at the local country club, and it really opened my eyes to the difference between, you know, the people that have, all the money in the world and those that have to work for it. And you kind of, got a handle on seeing those two different worlds. And I kind of knew right away which one I wanted to be in. I'm, I am at root, I guess, in a lot of ways, lazy. I don't want to work if I don't have to. And that country club gig, the caddy gig, it was fantastic because, a lot of time was spent um, between loops. They call them loops when you carry somebody's bag for 18 holes, was spent in a caddy shack. And we used to gamble on everything, card games, backgammon, prop betting, all kinds of different things. And it taught me some important lessons and, lessons that I still value today, truly. Um, so that's kind of that part of it had a little bit of an influence. When I met the bookie, Jimmy, at my grandfather's bar, I mean, that had an influence. I then spent a lot of my teenage years, 16, 17, 18, 19 years old, at the local horse tracks, Sportsman's in Hawthorne, Balmoral. I was there 3, 4, 5 nights a week. It took me quite a few years to figure out you just can't beat horses. It was just, it was not going to work. So I had to find something else. But those parlay cards, they were an unbelievable moneymaker for my buddy. And when I moved from Chicago out to Phoenix, it's, like I said in the article, I started doing it for myself, and it became a pretty good moneymaker for me. So that, 10 years of that was probably enough. I had my first kid then at the age of 30. And I'm carrying him around in a basket as I'm going and picking up envelopes. And you can't, I couldn't risk going to jail. Let's put it that way. And one of my closest friends that I've known since I was, I don't know, 6, 7 years old, he's an attorney. And I talked to him and he's like, look, man, He goes, you keep doing this, you're going to end up in trouble, you know? And I said to him one day, this is kind of a funny story. I said, listen, if I got arrested for bookmaking, where you're an attorney, which was in Michigan, and I said, and you walked into the courtroom, would you be sitting at my table or would you go to the other table? And his response was, I'd walk into the room, I would sit down at your table, tell you how disappointed I was in you, and then get up and go to the other table and send you to jail. So at that moment, I thought, you know what? Maybe I got to find something else. So that was kind of when I gave up the bookie game and, found gold. And it's like I said in the article, there's a lot of the same skill set involved for sure. So,
Yeah. And did you hear when you were a caddy, did you hear the golfers at the club talking about investments and owning assets, or was that kind of?
yeah, there was a little bit of that, not a lot. One of the things that astounded me the most was there were some people there, like this one guy, he owned a crane company. They rented out cranes to construction outfits and stuff like that. And you'd go carry that guy's bag around for 4 hours and he'd tip you like $2. And then there were other people, they tip you 50 or 100. And this is back in the 80s. That's crazy money back then. And I looked at those two people and I'm thinking, God damn, I don't think I could ever work for that guy. I don't think I'd be around that guy. Now, as far as investments go, I know the company he worked for, never would have invested in it. I don't know where he's at today or what he's doing, but
Yeah,
you know, so that's that.
sure.
On to better things.
So you mentioned that, the overlap between, being like a bookie or a casino owner, if anything, and also investing in precious, or I guess in the precious metals world. Is that correct? That there's an
Yes.
overlap. Both are low margin, capital intensive operations that require maintaining balanced positions. How does, is that correct? Am I understanding this correctly?
Yeah, it's when you're a bookie, you want to try and get equal action on both sides of a game, and that way you can just collect the vig and you have no risk. You have no risk. The all the money bet on the losing team will pay off all the money on the winning side, and you make money with no risk.
Yeah.
And so that's what you want. You want balance. The same thing is true in the precious metals business. You can't, you can't take market risk. Somebody comes in and sells a bunch of gold or a bunch of silver, and you write them a check, you're exposing yourself to movements in the market, and you can't do that. That's not the business model. The right way to do it is to basically have it sold, up the chain to somebody with deeper pockets the minute that client walks out the door. And if you can do that, then just like a bookie, you can shave off a percent or two and make money with little or no risk.
Yeah.
That's the model. And everybody in the precious metals arena does it that way, whether it's the pawn shops and the local coin shops on the bottom, or they sell up to the gold exchanges who then sell to the refiners who then sell to the bullion, and it's a chain all the way up. And nobody on that chain carries a position. They don't. Because it doesn't, you can't take on market risk. Let's put it that way. You just can't. You'll get killed. But if you keep that position the same, you keep your inventory steady, you can grind out a profit. And that's kind of the system.
Yeah, and this is different than the VIG, like a casino's VIG or DraftKings has a VIG where
Yeah,
that they're always going to make money a little bit.
right.
This is a
It,
little different than that.
it's similar though. Somebody comes in with silver and silver's trading at $100. Maybe I'll offer to buy their silver at 99, and the next guy through the door wants to buy it. I'll say, okay, you can have it for 101. And that $2 difference, that's the vig. That's
Yeah.
kind of how that works. So, but all the while, the most important thing is to keep a steady position,
Okay.
right?
Yeah. So, gold hit all-time highs, silver hit all-time highs, probably they're hitting all-time highs as we speak. You know, I get a lot of questions on people that have jewelry. This is not an investing question. I'm separate random question. They asked me, like, is there something they should be looking for as an accredited dealer or a pawn shop? And I have no idea. I'll ask Kevin when he's on the podcast.
So, um, when they talk about carat of gold, all they're referring to is the purity. And you take whatever that carat is, 10 carat, 14 carat, 18 carat, and you divide it by 24, and it gives you a percentage. So, like 18 carat, you take 18 divided by 24, that tells you the percentage of gold is 75%. So, 75% of all the weight in that item is pure gold. Then you take that item and you put it on a scale and you find out, how many grams it is or how many ounces it is, what it weighs, and then you multiply by the purity, and that tells you how many ounces of actual gold is there. And then from there, you can look at market price. Gold's 5,000 an ounce. You got half an ounce. Theoretically, there's 2,500 bucks sitting there. Okay. When you go into most shops, a lot of them, a high percentage of them, are going to look at that and go, okay, that necklace has 2,500 bucks worth of gold. I'll offer the guy 500 bucks or 1,000 bucks, something way, way below market. And they do that because a lot of people just take it. They don't know any better, right? The trick is, if you're going to sell it, is to know ahead of time what's there. So when he says, "Well, I can give you 500 bucks," you can balk, and the first thing he's going to say then is, "Well, how much do you want for it?" And if you say, "Well, there's 2,500 bucks there, why don't you give me 2 grand? You can make 500, and we call it a day." And you know what? 95% of shops will do it. They
Wow.
will. And the other alternative to that is to just go to 3 or 4 places. If you go to enough places and you're hearing the same thing from all 3, 4 places, what you're hearing is probably the truth.
Yeah.
So that's kind of the way to do it. If you have
Okay.
scrap to sell, that's what I recommend.
Yeah. So I guess since we last talked, you made a lot of my listeners wealthy because you were bullish on silver.
On silver.
Um,
Yeah,
you know, so do you want to talk about silver a little bit before we
I
talk about
kind of
Bitcoin
do.
and gold? Okay.
Let's start with silver, and we can get to Bitcoin in a little while. I'm interested in both, of course. Um, Silver, I had an interesting discussion yesterday um, with a refiner that I've been doing business with for 40 years. Okay. In There's only a handful of refiners in this world, like I think the four big ones that control roughly 80% of the market are Metalor, Valcambi, PAMP, and Rand. Those four, three of them are Swiss. I think the other one is South African. But anyway, they control about 80% of the refining worldwide. Okay. And my buddy is at Metalor. That's my contact. And I was talking to him, and they have effectively stopped buying scrap. And so has Valcambi. And this was as of yesterday morning, they stopped. And I talked to him and I said, "Look, man, you got 25 people standing outside your door all wanting to sell you dollar bills for 90 cents or 80 cents. I said, why aren't you buying them?" And he said, "Well," he said, "it has to do with hedging our book."
Mm.
And I said, "Okay, explain it to me." And this is the gist of what I was talking about in keeping a balanced book. Okay. If somebody comes into the refinery and sells 5,000 ounces, they will write you a check immediately for 95% of the value. Out the door you go. Their checking account, the money in their checking account goes away right away. And that metal goes and sits on a shelf for which there's now a 6 month backlog. So they have metal that they wrote a check for 6 months ago that they haven't even refined yet because there's so many in line ahead of it, right?
Hmm.
So, in order to keep a balanced book in that environment, as a refiner, you get into the futures market and you sell a contract short. So, you take 5,000 ounces in off the street, you sell one contract on the futures market, which is 5,000 ounces, and that effectively keeps your book steady. Now, the problem with that is that the futures market requires that you put up margin to do that. Now, on let's say you're buying silver hypothetically at $50 an ounce, and the market's at $50 an ounce. They're 5,000 ounce contracts, so the value of that contract is about 250K. Okay? They want you to put up 10% margin, so you put up $25,000 in an account. And if the silver price moves against you, now remember, you're short at that point because you've sold it. So let's say silver goes up to 55. Well, that's $5 an ounce move up times 5,000 ounces. Your $25,000 is wiped out at that point. So you're going to get a phone call says put up more margin. So you give them another 25 grand, silver goes up another $5 to 60, and that 25 grand is gone. So look at the situation that the refiners are in. They bought silver 4 months ago at $50. They haven't even brought it to market yet. And silver has moved up. Let's just say silver's at 100 now. It's moved up $50 against their short. They have to post $50 times 5,000 ounces.
Hmm.
They have to post 250 grand in margin, right? Just to keep that position. And if they don't post that additional margin, the exchange will close out their position and they owe the difference. They owe the difference. Now, when they eventually bring that bar to market and sell it for the 50 they contracted to sell it for, they get all that margin money back. But if they can't continue to put up more margin, their position gets liquidated and they get nothing, and they lose their margin money. So what has happened is with this huge backlog and the public doing all this selling, it's put the refiners in a position where all their money is in a margin account down at the CME and they can't buy because their checking account's just about empty. If silver continues to move up and they have to continue to put up more margin, some of those refiners, and these are multi-billion dollar companies, they're going to have to claim bankruptcy. They're going to have to file bankruptcy.
Hmm.
So I was talking to my buddy at Metalor, and he says, "Look, man," he goes, "we've gone to the banks. We're trying to get an increase on our credit line. We're trying to get another $10 billion so that we can continue to buy, but the banks are not being cooperative." Right? So I start thinking about that. And this is what's interesting. I have seen rumors all over the internet that US banks are now net long silver, right? They're not short anymore. They've cleaned up all their contracts. And I have to wonder if that's not propaganda that's designed to serve two purposes. Number one, it gives everybody the feeling that everything's okay, nothing's going to break, right?
Yeah.
And people that are looking at the rally in silver and thinking, man, maybe I should get in on this, are going to all of a sudden think, well, the fuel for the rally is gone and it's over. I missed the run. So it's
Yeah.
going to keep people on the sidelines and it's going to make people feel safe, right? So if it's just propaganda, that's what it's going to do. Now, the question is, why won't the banks give the refiners a credit line? And the only thing that I can think of that makes sense is the banks have been short for a lot of years, right? So the refiners are also short, but the refiners can get out of their short because with enough time, they'll be able to deliver the metal. Okay. If they go bankrupt in the meantime, they have a 6 month supply of silver sitting on their shelves in a warehouse somewhere. If you are a bank and you're not in the silver business and you're short, posting more margin is not a problem for you. They have unlimited funds, most of these banks. I mean, we're talking the
Hmm.
biggest banks in the world. So the posting of margin isn't the problem. The problem is being able to come up with the silver. Well, guess what? If one of your clients is a refinery and they are about to go bankrupt, they currently have a credit line from you. My guess is that credit line may be collateralized against the silver that you have sitting in the warehouses. And if they do indeed go bankrupt, all that silver now belongs to the banks who are short. And now all of a sudden, maybe they have a way to get out from underneath their shorts.
Hmm.
It's going to screw the refiners in the process, but they don't care. These are unscrupulous bankers we're talking about. It wouldn't shock me in the least if that's what they did. But I can't come up with another plausible solution that explains all those facts.
Yeah.
And again, the big run up in price, the public wanting to sell assets for 80 cents on the dollar and nobody able to buy them. Metal Ore won't buy them. Belcambi won't buy them. PAMP won't buy them. They shut the faucet off yesterday at about 10 a.m. my time. So we've been a full day and a half. Nobody's able to sell them. You look on Twitter and you look up hashtag silver, and you could see some people that are like, "Well, I went to my shops today. They're not buying."
Wow.
Well, this is why. Now you have to reconcile all of that with the fact that when you look at Shanghai and the Shanghai Metal Exchange in China, which doesn't settle in paper, if you go on to Shanghai and you buy a long contract, you are getting silver. You go on to Shanghai and you sell a contract, you are obligated to show up with that silver. And if you don't, I mean, they hang people over there. You don't keep your word.
Hmm.
So that is an all physical exchange. The price on silver today closed at, I think, 124 there.
Yeah.
On
One
top of that, they have a $13 VAT.
112.
No, 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 no. 112 is the close in the US.
Oh, okay.
The
Over
close in
there,
Shanghai
it was
is,
121.
yeah, I think it's actually a little higher, but okay, so 121. The point is it's clearly higher than the US close. It's been running 8 to 10% lately, and it's really increased a little bit in the last few days,
The
getting closer to
premium.
10 or 12%.
I mean, the difference in pricing.
Right. And then on top of that, they have a VAT. So you want to buy silver in China right now? It's costing you 122 plus 13%. It's costing you like 136.
Mm.
How can a commodity of any kind cost 136 in one place and 110 in another and not have that window get closed?
Yeah.
And again, the only thing that makes sense is one of those prices isn't real. And who controls the price that New York quotes? Well, again, that's the banks. And it's the same banks that are likely short. Who's not giving the refiners a credit line? It's the banks. The same banks that are likely short and look at that 6 month supply sitting on their shelves going, man, that would solve a lot of our problems.
Yeah.
So, you know, that is a plausible explanation as to what's going on. Do I know all of that for a fact? I don't. But
Yeah.
I can't think of anything else that makes sense. And I would love to hear from anybody if they have some ideas because I can't see any other thing that's plausible.
Yeah. So, what do you tell these meme buyers, the trade day retail traders that are just buying silver ETFs right now?
Well, here's the
Like
thing.
it's GameStop.
Yeah, but here's the thing. Who owns the silver ETFs? The biggest one, SLV, the custodian is JP Morgan. They're one of the banks that are short, right? If
Yeah.
if push came to shove, would they screw the people that are holding SLV because they had to deliver the silver somewhere? I think they would. I think they would. I wouldn't put it past them in the least if you look at their past behavior. Is that a guarantee they're going to do that? No. Maybe they can find another way, and maybe that way is to bankrupt some refiners. I don't know. But if you look at those things, SLV or the other ETFs, is it a good way to play silver? Yeah, but you got to be careful because when push comes to shove, you don't actually own the silver. It's
Hmm.
like buying IBIT or taking personal self custody of Bitcoin. It's the same thing. There's a huge difference between having self custody and having a promise from somebody else.
Sure.
And when the doo-doo hits the fan, my guess is that people are going to find out the difference, and they'll see it in silver and they'll see it in gold. Now, as for where silver is headed, long term, it's going way higher. There's no doubt about that. 2 years, 5 years, whatever. it's going to be considerably higher than it is today. Now, by the same token, it's also due for a big pullback. It really
Yeah.
is. It to be healthy and to shake some of these momentum players out and push them out of the market, it needs to pull back 20, 30, $40. And it needs to do it for 3, 4, 5, 6, 8 months.
Yeah.
The problem is it going to pull back 40 from the 110 today, or is it going to go to 170 first and then pull back 50 or 60? Either
Hmm.
one is plausible, but that pullback is coming. It
Hmm.
just is. That's the way these things trade. Nothing goes straight up in a line forever.
Sure.
As pretty as that chart looks,
Hmm.
the reckoning is coming, and it's going to put the fear of God in a lot of people because silver moves. It is definitely an alpha asset. It is perfectly capable of, like Bitcoin, of losing 50% in a month or two. It
Yeah.
does move like that. So,
Yeah. So you're recommending not to chase here.
well, I don't, yeah, I'm not crazy right now about silver. What I am crazy about, and that I think is grossly underpriced in that area, is silver stocks.
Sure. The miners.
Right. When I mentioned the beginning of the year on our first portfolio, I talked about SILJ, and you look at the performance of SILJ compared to silver, it should outperform silver at 2x to 3x,
Okay.
both up and down. And it's
Yeah.
not doing anywhere near that. You look at silver since July of last year, it's up 3.5x. The
Hmm.
SILJ is not even up that. I think it's up 2.5x, right?
Right.
It has grossly underperformed. And when these companies start reporting earnings in a couple more weeks and people see the numbers they're putting up, the other day I was looking at one of my favorites is Heckle Mining. I've owned it for a long time. And I was looking at analyst estimates, right? And you
Hmm.
click on the analysts that are doing it and you read what they have to say. They're basing their estimates on like $34 silver, right? You look at
Sure.
silver in the fourth quarter, which is October, November, December, the reporting quarter that's coming up. Silver averaged 57
Yeah.
in that 90-day span. And yet analysts are basing their estimations on 34. In what
Oh,
world does that make sense? Right?
wow.
So they're all going to be reporting ridiculous beats, both gold and silver. Um, and I just so I think there's more value to be had in those type of things, not necessarily anything company specific. Even though I do like Hecla, I would rather just buy the index because you get a broad
Sure.
taste that way. You're getting some Hecla, you're getting First Majestic, you're getting Wheaton, you're getting Endeavor, you're getting all the big boys, right? They're all
Okay.
in there, and it's a night that way. If one company has something specific that doesn't work out, you know, you're not going to sit there and have to watch everybody else that's in silver make a killing while you take a beating. So
Yeah.
it's a way to diversify in that area, and they have a lot of catching up to do. If silver just stayed at $100 for through say June or July, didn't go up, didn't go down, in
Hmm.
my opinion, the SILJ would have to 5x to get to a historical average
Wow.
if silver just stayed where it is.
Yeah.
So,
Okay.
look into it, and you can see that what I'm saying is true about analyst estimates and about the numbers that they're going to be producing and showing when earnings season gets there. And then just start doing the math because you look at
Yeah.
what these
Well.
companies are trading relative to their reserves, what they have in their books, and relative to what they're making. It is a dirt cheap, completely unloved sector right now, and it's one I
Hmm.
recommend.
Okay. We'll look into it. Um, wow, that's a lot of information. A lot of it went over my head. I don't know if what's the matter with me today.
It's it's a complicated subject, and
Yeah.
it's one that I spend a lot of time thinking about, and it
Yeah.
doesn't come it's not intuitive to understand what's going on. It isn't. Um, so hopefully I couched it or explained it in a way that makes sense.
Yeah. Yeah.
If not, they can always go onto my Substack and ask me a question, and I pretty much respond to everybody that writes on there.
Yeah.
So I can at least give you my 2 cents. And I would love to hear from somebody that has a more plausible explanation than the one I've laid out as to why the refiners aren't buying at this level.
Sure.
So,
Okay. Did you want to go over Bitcoin?
yeah, let's do it.
Okay.
I had two things in mind. Yeah, that's a fantastic photo right there.
Hmm.
So that basically shows 2024 and the first half of 2025, and it shows what Bitcoin looks like or traded. That's the chart for Bitcoin. You can see the three blue arrows and how they had quick rallies, right? And then they
Hmm.
traded basically sideways in a channel for, I think 7, 8 months the first time and 6 months the second time and 3 months the third time. Those three channels there, right?
Hmm.
The big thing to look at is those channels are all pitched so that they're down like a pennant or like a flag. Okay.
Yep.
And when you trade enough stocks, you realize that price moves in an asset are designed to, for lack of a better word, screw as many people on both sides of the trade as they can. They want to burn bulls and burn bears, and that's how stocks move. So if you look at Bitcoin, that first arrow up, and then it gets into that long channel, if you are bullish on the asset,
This
and
one right here.
yes, if you are bullish on the asset, and you are now in that channel that's been trading sideways for months, what do you see? You see it making lower highs and lower lows, constantly hitting the bottom, going back up, and it can't take out the old high, right? So
Yep.
lower highs, lower lows, you're a bull on that asset and you're going, man, it just can't seem to break the new high. And so
Sure.
your conviction gets tested, and a lot of bulls will fail and they'll just sell out. They'll go, maybe this thing is done. It just can't make new highs, right?
Hmm.
Now, the bears, let's say you're bearish on that asset. What do you see? Same thing, lower highs, lower lows, and you're a bear and you're going, look at this, man. It can't make new highs. It's making new lows. I got to pile on. Maybe I should lever to the downside, right? So that channel, because it's pitched to the right, gets people, gets the bulls thinking on the wrong foot, like maybe they should sell, and gets the bears feeling good about themselves, and maybe I should size up my position. And guess what? Anybody that thinks those two trains of thought, which are very easy to come up with, gets screwed because look at the end of the channel, it breaks out the top and continues. And then what do you get in the next channel? Same thing, a series of higher lows, lower lows, and the bull's thinking, yeah, maybe this is over with. I got to get out. And of course, the bears are going, this is finally it. It's finally made a top. It's screwing both sides. Okay. When the channel is pitched like that, it's a bullish sign. Okay. But if you're in the moment and you're in the asset, you really start to question because you look at it and think, man, it just won't make new highs. And so you want to sell, right? Same thing on that third channel, lower highs, lower lows, and again you question it, right? So
Sure.
now it should pull up that other slide,
Yep.
and
This is current.
this is current, right? You can still see those last two channels on the left, and then it hits the top and it rolls down. Now, what do you see in that channel? It's pitched the other way.
What the?
You see how it's
Is this
pitched
bad
up?
or good?
Well, you see how it's pitched up?
Hmm.
Think about what that does. If you're in the middle of that channel, which is pretty much where we've been for the last 4 months,
Yeah.
you're going, man, maybe this thing has made a bottom. It's made a little bit of a higher high and another little bit of a higher high. It's not making lower lows. I think we finally turned the corner and it's back up from here. So the bulls start feeling good, right?
Okay.
The bears are now going, same thing. It's making higher highs, it's making higher lows. Maybe this pullback is done. I should just take the money and run. So when you see it pitched up instead of down, right? The natural place it's going to break out is down the bottom because that would
Hmm.
screw both the bears and the bulls.
Mhm.
Now, the last point I want to make is when you see the breakouts of the channel, they tend to be very swift. If you remember the arrows from that first chart and you look at it, the time between the channels was very short. It ran up quick and then got in the channel for a long time. It ran
Yeah,
up quick, got in the channel for a long time. Ran up quick. That's how it works. That
sure.
because that's price discovery. Okay, that's what they call that. So
Hmm.
when you look at this second chart, I think it is highly likely that Bitcoin's headed down into the 70s.
Hmm.
And I think it's going to get there quick. Will that be the final bottom? I don't know.
Yeah,
Depends on what it traces out, but I think it's a very real possibility. Am I still bullish long term? Oh yeah. It's 2, 3, 5, 10 years from now, it's going to be six figures, maybe even seven figures. I have no
yeah,
doubt about any of that. But
yeah.
short term, it a breakout of the bottom of that would absolutely crush the sentiment of people that are long. A lot of people look at that and go, "Man, I can't do it anymore. I can't do it." And they don't quite understand the asset they own. They see it breaking out to new lows, and they're just going to throw in the towel. And I really think that's what's coming. So I think you're going to get some Bitcoin in the low 70s.
Mhm.
I know it's not what people want to hear, and it's not what I want either. But if you believe charts and you read charts, which I do, that's what the chart is saying. I hope
Yeah,
it's wrong because like you, I'm bullish and I want it to go up. We haven't
yeah.
had a number go up in a long time. We're due.
Does this look like a head and shoulders if it goes down more to you a little bit?
Uh,
Like just this time frame?
so a head and shoulders is generally what they consider a reversal pattern. Okay.
Okay.
And what that means is you can have a head and shoulders at a long time top, or you can have a head and shoulders reversal at a long time bottom. Okay. The neckline on a head and shoulders tends to be 90 degrees flat. It's not pitched one way or the other. Okay. It should be flat. And another thing that's indicative of a head and shoulders is both the two shoulders should take about the same amount of time, and the time spent tracing out the head is usually longer.
Hmm.
So you need a shoulder that goes up only so much, a head that goes up a lot and then down more, and then a shoulder that only goes up and comes down more. And the neckline in all spots is going to be flat, a
Yeah.
90-degree thing. So this wouldn't really qualify, in my estimation, as a head and shoulder because the neckline's not flat.
Yeah.
This is what they call a bear flag. And usually, not always, but those are usually resolved to the bottom. And if you look
Hmm.
at it, it looks like it just broke out or broke down in the last couple of days.
Yeah.
What you get when it breaks out usually is it'll go back and kiss the neckline quickly and then plummet after that.
Yeah.
And one more thing I'll talk about is usually these flags appear at the halfway point of moves. If you look at that first chart, you can see when it runs up, the flag basically appears halfway between the move. Okay, the first two arrows, the flag is halfway. In between arrow two and arrow three, that flag is halfway.
Hmm.
So there are congestion periods in the middle that are halfway through the ultimate move. And if that's
Gotcha.
the case from this second chart, then it makes sense to me that this is headed down to 70, 72,000 somewhere in there. It should find
Hmm.
significant support.
Yeah.
Hopefully, the Bulls can take over at that point and it will have flushed out a lot of the weak hands and they can start driving it back
I,
up.
my concern is I just don't know who the Bulls are anymore. I don't know who they are. I guess it's institutions. I'm not
It's
sure
it's
because
much more
retail.
institutions now than retail. There isn't retail involved, and I don't think retail's big enough to push this asset around anymore.
That's what I'm concerned about.
I truly
Where
don't.
where do we get the institutions to actually come in? I feel like we've hit a roadblock there.
I
One thing I want to mention is, I think charts are very important. I just think that I want to note like right here, this was mid-October. where it
Yeah.
kind of broke out here. That's kind of like when I think people, investors realized that Trump was going to win because the prediction markets probably really made another leg higher in terms of him winning.
Yeah, it could be
And
event
then
driven, sure.
yeah, well, yeah, but it's like both, It's kind of like they're both pieces to the puzzle. It's not just one or the other, in my opinion. But Bitcoin in itself is very chart driven because of the asset
Yes.
class itself.
Pretty much everything is on a chart. If you look at it, and the reason charts work more than they don't, it doesn't matter what the asset is. They're showing you psychology in real terms and how people think. Okay.
Yeah,
If you look at that channel, what is that first channel there? Okay. Every time it runs up, the bears are saying, oh no, here, sell, 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 sell. And they push it down to a point where the bulls say, that's far enough. And they push it back up. It's like a tug of war, right? There's a
yeah,
bunch of supply on the top end of that channel, and there's a bunch of people that want to buy on the bottom end. And the real question is, which one is going to win? Okay, because whichever one is going to win, the move out of it is going to be swift and quick to the next area of consolidation. Okay, this is if you study charts, this is what they teach you, and that's what you're looking at. You're looking at a real time tug of war, and it's trying to figure out who's going to win. And when you operate from the premise that the market is going to move in a way that screws as many people as possible, that's why you end up with pennants, bullish pennants on the way up that are pitched left to right, and bearish pennants on the way down that are pitched right to left.
yeah. And one last thing that you said, and I'll reiterate it, is it's just like the S&P. If you try to time the market, and you're out of the asset during one of these legs up, I mean, the amount of percentage you lose because it's only a few days, it's
Right,
only a few weeks.
right, right,
So it's
right.
amplified in something like Bitcoin.
Yep,
So if you didn't buy and hold and you tried to time this, you would have missed out on like the some of the best days, some of the best weeks where all of your gains really come from. Just
right.
look how small these leg hires are.
What it does is it gives you entry points. So you want to get into Bitcoin, you look at that first chart, you're inside that first channel, you know where the entry points are. You know where the
Yeah,
bulls are going to step in. I mean, they did it 6, 7 times. So you got $1,000 or 2,000 or 10, whatever, to put into the asset. That's what charts do. They give you a good idea when to get in,
yeah,
and they give you a good idea when to get out. Am I selling Bitcoin because I think there's a bearish flag here and it's breaking out? No, of course not.
yeah. We're
Right?
just presenting this,
But
and
I have a lot of dry powder and I am waiting because I truthfully expect 70, $72,000 Bitcoin in the next
mhm,
month or two.
yeah. If you let's real quick, I mean, this says 87
Yeah,
right here. The good
yeah,
news is for the Bulls is that we're at like 89 something right now.
right. It,
So
it rallied up. I actually took that picture this morning. So
yeah, it rallied
before
today.
market closed, but it's not uncommon when it breaks out for it to go back and kiss the neckline. That's a
Yeah,
very common thing. And we'll see if it breaks through that neckline, then maybe it's an aberration. We're right back on the channel and maybe it can run.
yeah. It's
But
happened before, as you can see
yeah, yeah,
here
yeah,
and
it
here.
does. Absolutely, it does. And
Yeah.
it's not a perfect science, it's just an indication.
Well, let me
So,
ask you this. If we don't hit 72 and you have some dry powder, what would you be looking for then? Like, let's say, hey, it doesn't look like we're hitting 72. We keep now Bitcoin's over what 100. Are you looking, do you have other assets on your watch list that you're looking at that maybe you can deploy some of the dry powder that you didn't get to buy in
uh,
Bitcoin?
yeah, I have been looking a lot more in the energy sector, the drone sector. And I'll give you another one that we recently touched on that I like a lot. And it's Rio, RIO. So you're probably not familiar with this, but
Rio
Arizona, maybe
Tinto?
you are. Yeah, Rio Tinto. It is Arizona. It has the biggest copper deposits on the planet, and it's not even close. There's an area about I don't know 50 miles east of Phoenix called Superior where they have a bunch of copper mines. And there's a big one right in the middle of that district called the Resolution Mine. And they've been trying to get it permitted for 15 years. And they can't do it. There's lawsuits working their way through the courts. For whatever reason, they haven't been able to get it permitted. Now, what's interesting about that Resolution Mine is it has the biggest reserves of any mine on the planet. There is a ton, not a ton, but I mean, there is tons of copper there. Not only does it have the most reserves, it has the richest grade. And what that means is each ounce of ore they pull out of there from the Resolution Mine has about 4x the industry average in terms of ounces per ton. Okay. That mine is owned in a 50% venture by Rio and BHP.
Gotcha.
One of them will have to do the work, the other's the money. To be honest with you, I don't even remember which is which. This lawsuit's been going on forever. It's finally basically got settled. Trump's government has stepped in and basically put an end to it. They're getting permitted. That's the word from on high. They're getting permitted. Now, it's going to be a year or two, at least, until they're up and producing, but it's the biggest, richest copper mine in the world, and with the biggest yield of any mine in the world. And Rio's a 50% partner in it. And that's why, if you look at the run that Rio has had the last 2 months, I think that all has to do with the Resolution mine. And by the time they start producing, a year or two from now, I think that one's going to be an absolute winner. That's a resource stock. So that's one of the things that I keep an eye on. I did buy a taste of it a couple months ago, and I have owned it for a long time. I don't have a big
Mhm.
position in it, but I do own it. And I'll buy more going forward if and when it pulls back. You see copper at
Gotcha.
$6. They're kind of like the silver miners are going to be producing huge beats because what they produce, they're able to leverage that price. Rio is like a leverage play on copper, in my opinion. So that's a good one. Energy stocks, I continue to pound the table on ExxonMobil. They have a rock solid balance sheet. They have the best properties in the planet. The best producing wells. I mean, they have it all, and they have top notch people running the company. And you look at all of that as a group, and it's hard to go wrong with something like that that pays. I don't know. I think they pay you like a 2.5% dividend to sit there and wait.
Yeah.
That one to me, absolute no brainer. Schlumberger, which is SLB. That's another one. Their oil services. Now, what they do is they provide the parts that make wells. You need a platform, or you need a drill, or you need a whatever. Um, they're the one of, if not the biggest, one of the biggest services companies, right?
Sure.
They look to me like they're just about breaking out to all-time highs, and if that's the case, that one can rip too.
What's the ticker on that?
SLB. Yep, you got it. I've owned that one off and on for years. Um, I don't own it right now, but it's another name that I like. And again, my shopping list right now is energy. It's drones because I do. That's another big one.
Yeah.
I think I gave you a couple of those ETFs that have done real well. Those are just areas where I want to be. And if I
Sure.
get the Bitcoin, I'd rather have the Bitcoin at 70K, believe me.
Yeah.
But if I
Yeah.
don't get it, that money will end up either in silver stocks, energy, drones, something along those lines.
Yeah. Very good. Yeah. I only bought a little bit of XLE after US Venezuela,
Yeah.
and then I bought Palantir. Oh, I don't know why
Yeah,
I did that.
I saw that. Um, what's interesting to me is, my wife owns Palantir. When it was in the 20s, I said, maybe we ought to buy this. And I started looking at the financials, and the sales didn't justify the buy, but she doesn't think like that. She bought some. She bought like 100 shares. And of course, it's 7x'd in no time, right?
Yeah.
And I don't own it, but I'm beginning to think when you look at that company that they're the chosen ones.
Yeah,
So
exactly.
there are some stocks, there are a handful of stocks that are absolutely the chosen ones. And for whatever reason, Wall Street loves them. They pile money into them. The people that run those companies, they're connected at the highest levels. That's Peter Thiel and what's his name? Uh, Karp? Is that his name?
Alex Cart. Yep.
Yeah,
Hmm.
that's basically who runs Palantir, right? Those
Hmm.
people are connected at the highest levels.
Yeah.
And you look at what they do, it's unique. Do the financials justify the price? They do not. They would have to
No.
grow considerably. But considering they're getting government contracts, when you consider the margins they have, I can see that doing really well. And on top of that, being the chosen ones, I could see that stock doing real well for a decade. I really can.
Yeah. Yeah. If they can try to replicate their importance in enterprise
Mhm.
B2B, then I think, that would be the miracle that's needed for them to justify something like a this price to sales ratio of over
Yeah, but
100.
look at Nvidia. They didn't justify, what they were th 2, 3 years ago when their run started,
And neither
right?
did Tesla.
But they
Yeah.
grew into it.
Yeah.
Tesla is still in the process of growing into it. Um, Tesla is probably the only stock that I own
Yeah.
that's not really justified by the financials.
Of course. Yeah.
It's very much an idea. It's an asymmetric bet with a ton of upside. And if he can, nail any one of those things he's working on,
Yeah.
I think it's grossly underpriced. And that's the reason I bet on Tesla.
Yeah, I like it. And also I bought Netflix
Yeah, I
I don't
saw
know,
that.
like 2 weeks ago.
That's
So,
that's one I've missed the boat on.
yeah,
I should have seen that back when they first came out with streaming 15 years ago.
right?
It's an absolute no-brainer.
I've
And when
owned
I
it and
finally
sold
thought
it
of it,
a
when I
lot of
first
times.
got myself a Netflix account, I thought, man, this is cool. And you go look at the stock, and it just seemed like it was on a 52-week high for months on end. You
Right?
never got a pullback, and it kept me out of it. I've never owned it, and even today with the big pullback, if you look at the financials, it's still hard to justify that price. Now, having said that, they're going to continue to grow. The revenues are going to continue to grow. I do believe they have pricing power. And I do believe people, their Netflix channel is going to be one of the last things, along with the cell phones, that the masses are going to give up
Yeah.
if things get bad. So,
Sure.
so they're recession proof in that way. They can continue to grow revenues. They can continue to grow income. There's a lot to like there. But I'm generally a value guy first, and I don't see the financial value that I like to see. It's
Yeah.
hard to see a world too. Think about this. It's hard to see a world where Netflix 10x's from here.
No, and I don't think it
It's
will.
not realistic, right? But
I I
I see a world where Tesla could 10x. I see a world where, Exxon Mobil or Rio could 10x. I see a world where drone stocks and silver stock, I see all that stuff. There's a real world out there where that stuff could 10x. Bitcoin could 10x, right?
yeah.
So this one doesn't have the downside. Netflix, I don't think has the downside, but I don't think it has as much upside either.
Yeah,
So
I think it can be a $1 trillion company in the
yeah, oh
far
yeah,
future.
oh
Yeah.
yeah,
I mean, I'd be
absolutely,
very happy with that. But
no
yeah, I've
doubt.
traded and sold this one quite a few times to like I'm more of a buy and hold guy, but yeah, I mean,
Yeah,
I've been in and out of it.
I don't do a lot of trading. I'm mostly a buy and hold guy too. I've got an article which I'm going to post tomorrow that touches on the difference between trading and investing, and
Yeah.
it's a way of writing that I haven't written before. If you get a chance, take a look. I think you'll like it.
Yeah, that's right up my alley.
Yep.
All right, cool. All right, so I guess we'll try to get back. We'll try to have you back on. Soon. And is there anything else you would like to discuss?
No, I think we're good for today. I want to, thank you once again for having me. I look forward to coming back and we'll see where things are in another couple of weeks.
Yeah, you have fun doing this. That's what matters, right?
I do.
And people can find you again on Substack under the name Bagholder, and the main newsletter, I think, is My Two Cents. That's kind of your
That's
main.
correct.
All
Yep.
right. Sounds
Yep.
good. Let's get you some even more subscribers.
Thanks, Colin. I do appreciate it.
All right. Thank you so much for coming on.
All right, buddy. Take care.
Thanks.